Welcome out to another Trading Justice podcast. We got a fun one. Listen, we got a heavyweight fight, right? It's Hollywood versus Tyson. It's Ali versus Frazier. It is retail versus Wall Street taking opposite sides of the bets, and not only taking opposite sides by massive margin. This is an epic showdown. We're going to discuss about that. Weave in the macro, weave into the charts. Got a lot of interesting stocks to talk about today. Got a couple games for Matt to play towards the end of the podcast, including some questions at the end. But before we get going, before I even ask my beautiful brother how he's doing, that brother of mine, Matt, is teaching a event this coming week. It is one of these like absolutely fantastic educational events where the knowledge will be dropped that you will be able to apply right after the webinar into your own routines, into your own traders to make you a more successful trading. Excited for one. I am a big, huge believer in routine. Matt, talk about this upcoming webinar.
Yeah, the 7-Step Guide to Trading webinars this Wednesday, May 28th, 7 p.m. Eastern Standard Time. We're going to have a lot of fun, as we always do. And I always have two goals in every webinar I ever do, Mark. I aim to teach a tremendous amount and have a lot of fun at it as well. And in trading for new traders, as you come in and you start learning the market, it's very important to have processes and systems. And I just think at first, and even veterans out there as well, having a step-by-step process to both find a trade, process a trade, execute a trade, manage a trade, and then journal a trade is very important. So if you're wanting to come learn a step-by-step process that you can apply starting immediately, the 7-Step Guide to Trading is going to be a tremendous amount of fun and awesome educational event as well. So that kickstarts our virtual conference season. We're doing a Tackle Trading. It's the first webinar we're doing, not the only one. After that, we got the Master Trader event on June 9th. After that, we're doing covered calls. After that, Day Trading Mastery. And so in the link in the description below, definitely sign up for the 7-Step Guide to Trading, but don't sleep on some of those other webinars as we go through our virtual conference season in 2025 with the kickstart on the 7-Step Guide to Trading.
Yeah, I'm a big believer in routine. We have a student question later in the show. I'll answer that question so I can talk about more routine. Then for now, though, Matt, I want to talk about this heavyweight match. Yeah, Matt, we are seeing, and you don't see this all the time. Oftentimes in markets, you'll have, both sides of the equation, retail and institutions on the same side, right? Trending markets either up or down, right? 2022 in a bearish market, you saw both sides bearish for large stretches. In the many bull markets, you've seen both sides bullish, right? Positioning and all that. That is not what we're seeing. And not only are we not seeing that right now, we are seeing dramatic differences in how two groups are approaching this market. On the one side, you have retail traders who, on this last Monday, right, set a record for the most amount of stocks bought on the Monday morning dip, like ever in the history of the market. This follows a trend that retail has been doing for several weeks, buying. On the other side of the equation,
I think they're accounting for like 34, 36% of total volume right now. It's not a small number. It's a massive number for retail.
Like they're certainly in. We'll talk about the reasons, the outcomes, all of that. But on the other side,
can I just say one thing to the to the Twitterverse or the Xverse and all the social media people and all the Wall Street lovers out there? Retail isn't just buying from Wall Street because Wall Street's dumping like it was the 2001.com or the 2008 subprime market when Wall Street was dumping and retail was buying into that. Retail's a lot more systematic these days. It's not necessarily the same comparison as what we have seen historically. Retail's more educated these days. They have information the same way Wall Street does. They just have a different opinion.
They have zero DTE options.
They have zero DTE.
They have more tools.
They have a lot of tools. And the simple reality
they have leveraged ETFs. They got
they just have a different opinion of the environment, and it's very important to understand.
Yeah, and on the other side of the equation of this epic showdown, we have hedge funds. And Matt, you flashed the graph a second, and I think it illustrates how insane. It's not just that retail is setting these records for buying. Hedge funds are also setting records for shorting. And so it's not just that on one side of the equation, you got retail a little bullish and hedge funds a little bearish. They are taking diametrically opposed views of this market conditions. It is just opposite. And it is what makes this interesting and why we're starting the podcast talking about this is one, it is how they're viewing macro. Two, there are implications because, Matt, one of the sides are going to win and one of the sides is going to feel pain in the short term, aren't they?
Well, we talked about this in Charts and Chill in our Discord session with the pros on Tuesday, and we talked about how the market was showing a little bit of pent up move, meaning we were expecting a little bit of a move. And I talked about the potential of doing a straddle position or a strangle based on the fact that you do expect some movement here, whether you expected the market to start forming the depth of the retracement by violating that moving average, the 9 EMA specifically. That occurred on Wednesday. And once that occurred, you have to flip the script a little bit to track that pullback. We're at a key level that obviously every pro member of Tackle Trading knows about right now, but we are at a key level. And as that market did start to pull back a little bit, that it did occur on obviously on Wednesday. But I wouldn't exactly say, because we're seeing a little bit of downward drift here over the course of the last 3 days against a pretty decent bullish uptrend, which I think any technician in the history of mankind would call this a bullish retracement at this point. I'm going to stop short of saying that the hedge funds are winning this argument here so far.
No, this is not. And Matt, we've seen that dip buying, especially in the morning. You saw like in the news flow this week, let's walk through the news flow this week. You started the week with the Moody's downgrade, right? Made big news on Friday night, last Friday night. Moody's comes in and downgrades. Over the weekend, you had individuals, hey, remember the last few times it downgraded, market sold off big? That's the morning that retail set the record, right? They could care less about the Moody downgrade, little 1% dip in the morning got bought up.
I'm honestly not sure anybody cared about the Moody's downgrade.
And retail certainly did. And on a Friday, Friday morning, as we're recording this podcast, tariff news struck this morning, where President Trump put out a couple Truth Social posts. One of them saying Apple's going to have to pay a 25% tariff. We'll talk about that more specifically in Stocks in the News. And that European Union, if they don't get their game together in the tariff negotiations, are going to get hit with a 50% tariff on June 1st, right? Gap down, right? Early morning action. And then we saw that bid come in right at the start. Now, I don't have the stats on it because it's too early in the day. I have a feeling 0DTE retail is buying that dip as well, right? So they have been not only on the way up, but on intraday dips on the way down. Matt, what do you attribute to the relentlessness of retail's buying during this stretch?
Well, I think once the trend started shifting and the volatility stopped occurring, as we saw the breakout of the reversal back, quite frankly, all the way back in April at this point, I think retail sees this as a short-term trend. And when you have the short-term trend and there's momentum in the short-term trend, you trade the momentum. I honestly don't know what the hedge funds are doing at that point. When the market broke back up out of bear stop out analysis, we talked about that extensively at Tackle being a catalyst and a positive change in the condition. And we were talking about it not from a hopeful situation. We weren't talking about it from a macro opinionated perspective. We were talking about it as the market was getting alleviation from the overall tariff conversation and the trade war side of the equation, that it became a technical story. And if it was going to become a technical story at that point, you had to trust your eyes more than you trust your heart at that point. And it feels like the hedge funds are trusting the heart and their mind's doing a little bit of tricks on them because they are not trading with their eyes right now. Once that broke back up above bear stop out analysis, and you look at the history of the trade war in trade war number 1 in 2018, and you look at the history of the pandemic pricing and V-shaped recoveries, and you look at technically the probability of V-shaped recoveries post-pandemic to now versus pre-pandemic, And I think they're trusting the technical side of the equation here. Dips were bought because momentum occurred. Dips were bought because the 9 EMA and the 5 EMA were now acting as a support level. And as that trend and that pattern held firm, you were going to trade that trend in that pattern. Once again, I don't know what the hedge funds were looking out there, because if you go back in time, hedge funds would be buying in this environment, but obviously they're not. So they're looking at the fundamental side of it, and they're saying valuations at this point. They're saying, uncertainty at this point. And I'm not here to debate that. I'm not here to argue against that. But in a short-term situation, how do you not see this as a short-term bullish uptrend against the backdrop of a V-shaped reversal that got confirmed in late April and has seen nothing besides continuation of momentum ever since? And the only situation this week that occurred to change that analysis, once again, you can talk about the fundamental condition, you can talk about the macro condition, you can talk about trade wars, you can talk about bonds and yields, and you can talk about all the macro. But it was, again, when you just look at it through the technical lens, don't you see this as we were beginning last week in a slightly overextended condition that secondary patterns were going to develop?
That is from just a technical classic momentum
kind of what I wrote about last week in the newsletter, that we were slightly overextended and we were going to see a little bit of technical patterns. And what I was thinking about at the moment was the market having the 5 and the 9 EMA catch up to it, forming a little bit of a base. And then we were going to look at it through the lens of the momentum patterns of the base versus the flag. Well, right now, what do we got? We got a bull flag. That's what we have right now. That's the technical pattern we have right now. It is a bullish flag against a short-term bullish uptrend in the middle of a recovery. Obviously, there's going to be some moments where we deal with downward pressure on price, and it becomes very important to understand where those key levels of support.
And we're at one of those key levels from a technical perspective, because I tend to side with the bears and the hedge funds on the broader thing. But this is a really big support technical level that, I was talking to you this morning as we were talking about different things, and I'm like, and I made a joke. I'm like, for me to do a bearish trade, I need to see this, and you were like, yeah, you aren't getting that.
You're not.
I needed.
Might as well not even talk about it right now.
Yeah, you're like, fantasies and fairy tales and
okay. So what is the hedge fund argument here? Okay, because I think I think in general, the retail sees this as a recovery, alleviation event, and I do think there's some trust that the trade side of the equation is going to get worked out. I do think there's some trust in that. And I don't get me wrong, I know that gap down today was due to Apple tariff news and hypothetical 50% on EU tariffs. Mark, it took Scott Bessent 5 seconds to get out there on the news and start trying to walk that back.
Scott Bessent, Mark,
5 seconds. 5 seconds is what it took.
So much.
And even if Trump starts embracing,
Scott Bessent has not done one but 2 interviews this morning.
Mark, that's not even the one that was scheduled. The ones that are scheduled is happening right now. Yeah. Those were not pre-planned. Those came out because the market was capping down. And so, this isn't the first time we've seen the president use the bully pulpit to push somebody off their position. And doesn't it seem like he's trying to push the EU off their position right now? And so I think the market on the retail side of the equation doesn't necessarily take everything that comes out on the True Social side in this trade war conversation as the end all be all, because I think there is some degree of trust in the fact that this is an open negotiation. And so for example, do you really believe that we're going to deal with 50% EU tariffs ongoing?
No, I do not believe that.
Does anybody really believe that?
No, I don't think anyone really believes that.
Okay, so that's what the retail side is saying is, yes, that's a negotiation tactic. Is it a concern in the short term? Absolutely. It's not that the retail side doesn't understand the environment, Mark. And that's what's driving me crazy with the Wall Street side of it right now, acting like retail has no clue what they're doing. And it's not that. It's that they understand that this is an ongoing negotiation.
Retail has access to as much information these days as
they have a different opinion is all it is.
They have a different opinion, right?
So with that said, what is that hedge fund argument? Why are they net shorting at a higher level right now than they've done ever since the pandemic, Mark? They're shorting against this bullish uptrend. Every day this market goes up, they're shorting more. Why? What's their argument?
Well, I don't think you can collectively put the totality of every hedge fund into the same argument, but I can give you a recap of some of the bigger ones. One, your general hedge fund would probably describe this environment as capped out. Like there's not the catalyst to move
like
higher.
There's a ceiling.
There's a ceiling. And so I think I think in understanding the confidence.
Where would they have put that ceiling 20% lower?
You know, if they were 20% lower?
No. Let me rephrase. Obviously, there's a ceiling the further this trend goes up, right? But how long do they have to be wrong on that ceiling? Because they were shorting here.
No, yeah,
here,
no, the shorting
here. Like they're shorting against the trend.
Against the trend on the way up, and it's accelerating. It's not decelerating, right? There's been little pockets.
Yeah.
But I think your general, like, kind of the underlying premise behind a lot of hedge funds is like, listen, you can go up. This market is capped at these valuation levels. Where's the growth, right? I hear phrases like price for perfection, right, all the time in the last few weeks, right? And that phrase is basically, a way of saying like, yeah, like if anything goes wrong, this market has a lot of downside. And then you got fundamental believers, right? I know a lot of individuals out there, and you hear some version of the Dan Niles, Jamie Dimon argument that, listen, earnings are going to, contract. The economy is going to stall. You're going to see those contractions in earnings. You have individuals with yields saying that at these high levels of yields, that's going to contract, right? I actually don't hear a lot of tariff, other than, hey, it doesn't help analysis out there, right? Most of this has to do with seeing the economy and earnings slowing down, the market price for perfection, and that, if anything else goes wrong, right, the risk reward feels very skewed to hedge funds to the downside. And so I think that, are some of the things that are fueling the confidence.
Let me ask you a question on the valuation side of the equation. At what point in the last 5 years have we not had overvalued environment?
No, dude, it's been a constant for 5 years.
Okay. So when people bring up the valuation argument in an environment where that has been a flat line for 5 years, what are they really saying?
They're saying something bad's going to happen is what they're really saying.
So because when somebody brings up valuation, it's usually not, it's not because they're actually caring about valuation. No. These same people didn't care about valuation 6 months ago. They didn't care about valuation a year ago. They certainly didn't care about valuation 5 years ago. They haven't cared about valuation, quite frankly, since 2010.
And there will be a point in the future, whether it is this year, next year, or 2 years ago, that they will go bullish at higher valuation levels. Like that's, yeah.
So I just want to call nonsense on that valuation argument here, because that has been a flaw in the analysis for 15 years, Mark. 15 years. That second point, though, where's the growth coming from, right? You got that same degree of comparison, right? You have, all right, the valuation argument. Okay, honestly, understand we've dealt with overvaluation for many years in a row now. Secondarily, on the growth, that's an open question. Where is that growth going to come from? Well, that growth, when you look at it on from the retail side of the equation, comes from the alleviation of the tariffs, getting back to some degree of normalcy and having better trade deals as an end result of the entire moving 6 months into the future. Retail says, yeah, we're having a tariff conversation today, a trade war conversation today, but in general, we have trust that that's going to find a proper resolution, and we're going to have a better trade environment moving into the future. I'm not saying that's 100% the end all be all argument. It's not something I agree with 1000% either. I'm saying that's what the retail side has said in this environment. They don't talk about valuation because nobody talks about valuation in the last 5 years. They only bring up valuation when there's other things they don't want to say, or there's other things they can't describe to a certain extent.
Well, and let me be blunt.
If they're bringing up valuation, what are the hedge funds really saying?
They do not believe Trump's policies will result in upward growth in the market,
and they don't want to say it.
And they allude to it.
Yes,
they use code words, but they do not believe Trump's policies in a combination of tariff and fiscal policies will result in
which means that's the real battle between Wall Street and Main Street or hedge funds versus retail. Do you believe coming out of this environment, we're going to have a better trade situation moving forward? Right. That's inherently the underlying argument.
Like seriously, and you just nailed it. At the end of the day, it's just not trade. It's, do you believe that the current policies are going to produce growth or not? Retail says yes. Hedge funds say no.
Hedge funds better hope that tax bill doesn't get through.
And what's interesting about this battle, and I want to come back to this straddle idea, is that this battle, right? A heavyweight fight, has so many rounds, right? There's a limit to the amount of rounds that it can last, right? There is also a limit to how.
At one point, somebody capitulates against
at some point, yes. Like somebody gets knocked out, or just time takes care, and that is how this will play out as well.
So the question is, who capitulates first? The retail on their buy the dip philosophy here, Mark, or the hedge fund on their, pain? Because it's been a couple of days good for the hedge funds, but that's just a pullback here.
And
all this is a pullback.
This battle hasn't been won
more than this, other than this is a bullish pullback. We're tracking it as a flag-based pattern. I don't think anybody at Tackle should be surprised that we're tracking a pullback after the 9 EMA gave. Like I that is 2 + 2 at Tackle trading. I don't care what the environment is. I don't care if it's post-pandemic, pre-pandemic. I do not care.
You break a support level, you go find the next support level.
I don't care what the macro conversation is about the causation. It's important to understand, but at the end of the day, this is a technical bullish retracement. And the ultimate question is, does it pivot or does it track deeper? And if it pivots, are you prepared to take action when we get confirmation? And secondarily, if we continue to come down, where's that deeper retracement and what do we need to see on the bull side? So this is still going to be a technical conversation to me, as the market still feels technical to me.
Yeah, and I think it's important to understand from whether you are bullish or bearish, whatever side of the equation you are, that there's a big move coming, right? You could have some consolidation like we've had the last couple of weeks, go back and forth. But eventually, you're going to get either a catalyst, technically or fundamentally, probably both at the same time, that sends the move in one way. And it's important to understand that whatever that move is, it's probably a 4 or 5% move, right?
Well, and when you ask where the growth comes from, the growth comes from two aspects. Number one, alleviation on the trade side. That is a bullish argument. And number two, I don't think you can discount the AI build out in the last 3 weeks. I just don't. I think you discount it at your own peril.
Yeah, we're going to talk about a little bit more of that in stocks to news. I want to pop over to gold right now, because in the midst of this really busy week, and I really enjoy this conversation, and I think it's just fascinating stuff.
Well, who do you think wins?
Hedge funds.
Who capitulates?
I'm on the bear side. I'm on the bear side of the equation. Have been all year. It's never been about tariffs for me. It's been about yields. It's been about other things. I think the hedge funds have the better argument. Doesn't mean they'll win. Doesn't mean I'm right. That's where I am looking to side with. Unless you get a deeper pullback on tech, then I'm going to be a buyer of that, right? And so,
have you been carrying a bullish delta in the last 3 weeks?
No, I have not.
Okay, I have. I'm on the retail side. I think hedge funds end up capitulating here. I do think it's not a guarantee. I don't think it's a high probability. It's a battle. We're talking about it for a reason, and we're at some very, very important technical levels. I talked all week long. I talked in the newsletter last week, talked this week. I will talk about it today in the newsletter, the importance of the 200-day moving average in this in this shallow pullback right now. I know Coach Frank's going to be talking about it in the Traders Report as well. That's how important it is. But at the end of the day, Mark, you get an upward movement in price here, and you get a confirmation. I'm sorry, hedge funds are going to get smoked.
Last 3 weeks have been a heavy drinking, bearish, sad phase for me. All right, I get it, right? But the one thing I am is that if there is a bullish setup come up,
Can
I'm
I
going
ask you a
to add.
question?
Yeah,
Oh, go ahead.
no,
Finish your
like this, and this is where, like, I am primarily a fundamental guy, but I am a part of the tackle trading community, which means I am surrounded by amazing technicians in our community.
We have some very good technicians in the
And
community.
so, like, I'm also not a glutton for punishment. That if on this pullback we get a stabilization, a consolidation that then breaks out, put in that,
You
like,
mentioned yields.
Mhm.
You mentioned yields, and you said that's kind of the epicenter of your bearishness is the yield
Yes.
conversation. Correct? Can you expand on that very
Yeah,
quickly?
and pop over to gold, right? While we have that conversation, right? And so this week, in the midst of a lot, and this was a really busy, heavy news week. Started with Moody's, ended with tariffs, but in the middle, it was all about yields,
Mhm.
right? Is that you
Well,
have
that's why we're talking about a pullback. Is 2 days ago we got the bond auction that was absolutely terrible.
and so you have a situation with yields where you have the 10-year and the 30-year breaking out. And these charts never matter until they do. Like, like they never matter. They never matter. They never matter. In fact, it was funny. I was watching a Bloomberg show the other day. I can't remember the guy's name, but he's been on forever. And he was like, I hate this. I need to go get a bond expert to explain what's going on right now. Like, this is a market veteran, but he's not a bond guy, right? Because, most of the time, these conversations don't matter. But when they do tend to suck all the oxygen out of the room and become the only conversation that matters. I did a great class for my cash flow Vikings the other night where I kind of walked through the 101. Don't have time to do that. I'm going to give you a brief recap. Yields matter because, companies that borrow money, like the long duration companies, biotech, small caps that need to have that funding, right? They have to borrow at a higher rate. So it impacts them negatively. Companies like staples companies and dividend companies. If I can go get 5-6% on short-term paper, well, that 2.2% dividend on a stock that I have to take individual stock risk, that doesn't look all that appealing, right? So there's real world ramifications for higher yields, both on an individual asset level and on an economic level, right? Higher yields tend to stifle things, right? This is just kind of econ 101 stuff. Doesn't really impact mega cap tech. That's a whole conversation for another show. Mega cap tech in 2023 and the yield conversation was pretty insulated.
Specifically in yields, big cap tech doesn't need the financing to continue to run their operations. They have a large moat,
and you heard some things that bugged you this week. I heard this
I had a few things that ended up
I heard this from financial media, and I'm like, you do not understand the modern environment, because they're like, well, technology and long duration is going to get higher.
They're still using market cycle analysis and business cycle analysis from 1980.
It doesn't apply anymore. Mega cap tech's was insulated in 2003. If yields go to 5.5%, 5.75.
So I think and this is the heart of the argument for the bear argument is constant yield pressure up, epicenter.
I think it's the best
the bond market continue to go down. I think we can all agree that the yield conversation caps out market performance on the growth side. Can we both agree with that?
Okay. Yes, on that.
The ultimate question then is, where is that ceiling? On is it the 200-day moving average in a recovery? Is it the all-time high? Right? Where is that ceiling? I don't know. I don't think hedge funds know. I don't think you know. I don't think any listener knows. I don't think anybody on Wall Street knows. I don't.
This is a live dynamic situation.
Yes, I just don't think that's going to cap out short-term price performance. I do think the market has the ability to get back up into the highs. However, on the yield side of the equation, Mark, if bonds continue to lack a bit, as we saw in the bond auction this week, right? This week on Wednesday, we had a bond auction, very, very little bid. Bonds came down to find those bids, and that created the pullback scenario in the market, correct?
It did.
Okay, if that continues, isn't there an equal Fed put there somewhere?
Okay, if that continues, you will see ARC, XBI, biotech, and small caps get hit first. You'll see those charts break support first. You will then see staples, defensive sectors hit next. Cyclicals come down the road. Mega cap tech's going to be kind of insulated from all of this because it's not that.
The point, though, doesn't it force the Fed to eventually
if the pressure gets big enough, right? If it gets big enough, this Fed, they had speakers out today, They had speakers about yesterday. They've had speakers every day. I'm getting tired of it. Even as a macro geek, I'm getting tired of it. There is a point to stabilize the bond market where the Fed will have to come in. Scott Bessent is brilliant. There's only so many things that Treasury buybacks can do. He has a limited tool set. If the Treasury market, if yields spin out of control, if you have an unruly move up into the mid fives, the Fed, this is the most important market in the world. This is the most important market for stability. The Fed will be forced to come in and do some sort of emergency QE. That will be forced to occur.
They wouldn't call it QE, but
yeah. They won't call it QE.
But yeah, okay, so that's kind of my point on the capping of the downside, which means there is a Fed put there, even though everybody has suggested there is no Fed put in this environment. The yield conversation is forcing that to a certain degree. And so, okay, so hedge funds have their argument, retail has their argument. I think at the epicenter of it is the belief in the recovery. Do you have a belief in the recovery? Do you not have a belief in the recovery? Do you think the alleviation on the pausing of tariffs is real, or do you think there's extension on the tariff conversation? To me, this has always been an open negotiation that I think a lot of people miss the signal through the noise on the tariff side of the equation. And I think hedge funds are trading their opinion on things more than what they're seeing on things right now. To me, the most important part of this entire conversation is, does the market pivot at the 200-day moving average, which is a known technical zone that hedge funds, retail, your mom, well, our mom,
it's one of those technical levels that stands out
daughter,
even to not, everybody, it's a technical level that stands out to non-technicians.
Yes, which means let's see what the technical side has to say about it. I think it's important to understand the argument between hedge funds, Wall Street, and retail, i.e. Main Street. Everybody's going to have their opinion on that side of the equation. I do favor the retail side of this equation, but quite frankly, I'll always favor the retail side of the equation.
Yeah, and so like whatever side of the debate, pay attention to those technicals. We do a very, very fantastic job in our community guiding people through the technicals on that.
If retail's wrong, I'll call it out, but I don't think they're wrong.
Yeah, no, like if this thing breaks, like don't have
retail's bias. Mark, has retail been right on the alleviation of the tariff conversation?
100%.
Okay. Let
me give you a stat. They had the biggest inflows in the month of April in the history of the market.
Okay.
They were right.
And they were saying alleviation. We were saying alleviation before alleviation occurred, correct?
Yep.
Okay. So they've been right so far. Yep, hedge funds have been wrong so far.
This is correct.
This is the moment in time where we really see that expand. Does the hedge funds come in here and start buying at the 200? Do they regret missing out on that momentum trend? Do they regret missing out from that increasing pivot, from the bear stop out analysis to the consolidation break? Do they miss they missed every single pullback?
How strong is their conviction?
They missed every single pullback into the 590 MA combo for 2.5 straight weeks. They missed it all. So they missed it all. I'm not going to give a lot of weight to their opinion when they've missed everything so far. Now, to me, flip the script, reset it, and look at this with fresh eyes from a pullback scenario. You were tracking the momentum conditions. That's over now. The market gave up that momentum on Wednesday. Now you track the pullback, and what this conversation is really about is not whether or not retail's right or Wall Street's right. It's really about, do we get a pivot formation at that 200 combo 20 SMA? That's the important part of this entire debate. It's important. It's entertaining to understand the hedge fund and the retail side, and I get all geeked out. I get all geeked out on Wall Street versus Main Street and all that jazz. It really tickles my populism. There's no doubt. But at the end of the day, all I really do care about is, does the 200 hold here?
Yep. And as a bear, I want 5 days of consolidation.
I think you want the same thing. I think you're looking at the same thing, saying, does the 200 here hold?
Does that 200 here hold? Right. Yep. No, it's like, bull or bear. This is a big moment.
I like my answer.
Check out Morning Action and follow the technicals for our pro community. We'll be breaking that down live every day. Let's get over to golf.
Hold on. There's a great question by our community. Omar says, can retail decide to take profit? well, let me ask everybody else a question that's listening to us right now. Has retail, you taken a little bit of profit off the table in the last 3 trading sessions? I'm willing to bet the answer is yes. And so, yes, Omar, retail has been locking in profit here.
Yeah.
And that has been part of the pullback. It's not just hedge funds, piling on shorts, and that's what's creating the pullback.
Well, they've been doing that on Monday morning, didn't
They've been doing that
profit
for 3 weeks. Hedge funds tried to do that on Monday morning, and retail came in and bought. So when it flipped the script was when the bond auction occurred and retail started dumping there too. So it wasn't just hedge funds kind of seeing that, because hedge funds didn't have any profit to do here. But yeah, I do think one of the reasons we're seeing the depth of the pullback here is because retail has been doing that as well. That now I think is reset. That's what I say when the reset language comes in, is that you're now at a position, you're not overextended anymore. And when you're not overextended anymore, it becomes a matter of, okay, does support get built here? Do we get the confirmation? Understanding the dynamics of the creation of a pivot with the preceding candle, which is today's candle, a bounce candle, slowing momentum candle with the confirmation. That is the story that really,
all right, we have to move along if we're going to get this done in an
I
orderly
thought
time.
Omar's question was fantastic. That's all.
One question for you before we leave. Retail, what heavyweight fighter are they in this battle? Who is retail?
Retail's David.
Yeah, I think they're Peter McNeely. That's who I think they are. So
only if Peter McNeely took Tyson to the 9th round and was winning on the scorecard. That is a terrible analogy.
I think they're Peter McNeely.
Peter McNeely. I want to fight you right now.
I think hedge funds win this one. All right, getting over to gold, where we all can be bold.
Listen, I think part of your generation was born where Peter McNeely lived at one point. So
listen, I'm bearish on stocks. I am not bearish
I get it, but Peter McNeely.
I've been trying to transition to gold for 10
Peter
minutes.
McNeely. That's going to help.
Get over to the gold chart for crying out loud.
That's funny though.
It's a fantastic narrative. You got fiscal deficits everywhere, not just in the United States. Budget bill got passed. I have a question from a student on that we'll talk about in a little bit. Like exploding deficits, little bit of chaos, technical stability. I mean, man, it's pretty good narrative backdrop for gold right now.
Yeah, I'm not going to put too much into the analysis, quite frankly. I got it in a neutral condition with the positive edge back up to the top side on gold. Obviously, any environment, if you tell me you want to start building a position on gold, I'm not going to say no to that. I obviously love the instrument, but I also don't think we should over evaluate the middle of a range analysis while the market's doing a pullback.
Yeah, no, it's good narrative. Watch for those breakout levels, though, that if they occur.
I do like gold, and I think the edge is back to the high here.
And Bitcoin hitting all-time high this week, right? Really coming off. You saw as yields went up, and this was interesting. As yields went up, as there was a little bit of fiscal chaos, Bitcoin used that as a positive catalyst to break out of its recent high base. It's been a beautiful
good breakout trend this week. Yeah,
it was a good trade war comes in, it creates a little volatility. And this is something we've seen. Fiscal chaos, Moody's downgrade, government spending too much, yields going up. Bitcoin doesn't care about that. They do seem to care about the trade.
I thought Bitcoin and crypto in general was calling out the fiscal viability of that budget plan.
Yeah, no, and so I mean, crypto, big fan of both these instruments. Technical development obviously plays. Just peeking on it.
I thought IBIT and Bitcoin had a really good breakout on a multiple time frame this week. I do have it slightly extended here, just from the breakout specific
all I think
perspective.
That's happening today is that was the tariff stuff is causing an excuse from
any risk asset come in. That's it. It was so aggressive that IBIT came to the 5 EMA.
I know, like big huge pullback.
Yeah, like big pullback there. I want to pull up very quickly. Ethereum,
I was going to ask you to do that
actually. You kind of look at it through the lens of a little bit of consolidation right now, but that consolidation is happening at a really important level to understand. At the resistance point of the high point from 2 weeks ago, kind of got into the same resistance levels that were dominant before that parabolic uptrend that old Greg got us all excited about late last year. Now you're looking at that same type of breakout level here. It took a few months to do it last time. I doubt it takes a few months, but that's that next level, that 2075 level, that 2070 level on ETH. When you are looking at ETH, at Ether itself, you see it right there at about 2750. So keep an eye on that 2750 breakout level. That breakout level, you get back up above, you do get into a little bit of open air there. And so just keep an eye on Ethereum, both Ethereum and Bitcoin. In my estimation, Bitcoin had a really good week. I thought Ethereum had a good week of development, though. Like when you want development, you're going to have a little bit of up and down there.
I think
Ethereum gave some pretty good development this week in front of that 2750 breakout channel.
Why stonks are stinky to me and McNeely to me, crypto's Ali to me. I just love the space right now. Just love the space right now.
I think you should be banned from boxing analogies.
No, dude, if they bother you, there's more coming, bro. Come on. If I know if it bothers you, there's more boxing analogies coming, not less. Let's get to stocks in the news. Let's throw out Apple real quick. Part of Trump's True Social media brigade this morning was announcing that he's going to put a 25% tariff on all Apple iPhones that are not made in the United States. Now, Trump has telegraphed his displeasure with Apple, as they've made plans to move from China to do more of their manufacturing in India. Trump hasn't liked that, announced that. I don't know if that has any teeth to it. I don't know if that's a real thing. I don't think anyone in the market knows if it's a real thing right now, but it was certainly news, and put this one in the realm of technical analysis for me. What's your take on that news that broke this morning?
On Apple? On the tariff news?
On the specific, tariff on Apple specifically.
I don't think it's going to eventually have a 25% tariff. I think Trump's trying to get Apple to embrace bringing iPhone production back to the United States. And I do think it's an interesting conversation because on one hand, you could make the historical argument that bringing iPhone production to the United States would elevate the price of iPhones to a level where American consumers cannot afford it based on current production standards. You're talking somewhere between $3,500 and really kind of $6,000. That's a healthy fee. But in the age of automation, and I do think sometimes we don't look at the lens through this trade deal negotiation. I think a lot of times we look at it through the lens of current, right now, what's happening right this very second to impact our lives. But when you think about this conversation in 5-10 years from now, in the age of automation, I think you do want to control as much of the manufacturing development side as you can. And in the age of automation, you don't have wage impact on cost to produce the same iPhone. So I do think it's a really interesting debate, quite frankly, when you think about this 5-10 years from now in the age of automation versus what we're going through right now. If all you do is look at it right now and you say it's absolutely crazy to bring iPhone production back to the United States. Yeah, you want to decouple from China, and that's kind of what Apple's doing by moving to India. But what Trump says is, I want that home. I want that iPhone production home. You're pledging $500 billion to U.S. infrastructure. Let's start bringing the iPhone production home. Well, again, if you look at it through that lens right this very second, I think that's a negative. You're looking at it through the visionary look at 5-10 years from now. Is that cost to produce that good the exact same in the age of automation as it was in the age of human beings manually doing certain things? Obviously, that's not the case. That's a deflationary argument. I think automation in general is a deflationary argument. And so I think it's an interesting debate, but I think it's more of a, again, I'll just come back to it because that's how I see what Trump does in the public lens, is trying to push people into a position. And whether you agree with that or not, or Trump using the presidency as a bully pulpit to get people off the position, I'm not here to have that political debate. I'm here to have the impact on what that would have on Apple. And if even the policy, I definitely get into the policy side of it, if the policy is a good policy in general. 25% tariff on Apple is not a good policy in general. but is the threat to get Apple off their position to invest more in the United States, which I think is what the real signal is. The noise is the 25% tariff on, that's the headline noise. The signal is, what does Apple do in response to that? So I think it's an interesting debate. I don't think the 25% tariff will occur here. And so if it did, I think you would see Apple far further down than that. And so I think it was a warning sign. We'll see what Apple has to say about the production. But I just want to keep that in mind always when I'm thinking about this trade deal, Mark. And when I'm thinking about all these trade negotiations in general, I truly do try to see it through the lens of 5 to 10 years from now, because if you judge it through the parameters of the here and now, today, manufacturing today, that's a different conversation than in 5 years from now. Because Mark, if Apple decided to bring iPhone production back, it will take 5 to 10 years. That's how long it will take. And in that time frame, I promise you, unlike Howard Lutnick suggested a few weeks ago with human beings with little tiny screws, tightening in little tiny screws into the iPhone, that's all done through robotics. That's
that
all
guy
done
lost
through
his
automation.
media card. Like Scott Bassett took his media card.
Not faster than the other guy did.
And Peter Navarro, who's he?
Yeah, he's gone. But
Scott Bassett, 24/7.
Well, that's because the market hates the other two, and they like Bassett. But no, regarding like Apple, it was a fascinating headline. I'm trying to not make more of the headline.
All right. Next stock in the news, Tesla. What seems like a million years ago, there's been a really heavy news week. Elon Musk, talked about his pilot robotaxi program launching in Austin. He talked about his commitment to lead Tesla for the next 5 years, and says he'll only step down if he's dead. Right? Said he is going to step back, forced out of political, interaction. It seems a long time ago, but generally, listen, Tesla investors want Elon at the helm. They like the futuristic shift, right? It's just not a car company. They need more of that. It's a good week from Tesla.
We also forgot the rumors of XAI and Tesla coming together.
It was a good week from a storyline.
Well, lots of news coming into Tesla, obviously. I think when you're looking at Tesla here, I think for everybody, we're looking at the 350 level. Obviously, bases and flags everywhere right now in the market. Bases and flags. You got Tesla as a high base, 9 EMA's caught up to it. And the breakout here at 350 is a real situation that we're certainly going to be tracking and tackle. On the fundamental side of it, I thought it was a good week for Elon Musk. I thought the media takes everything Elon says a billion different ways, a billion miles an hour. But I thought when he was talking about committing to Tesla, I thought that was a positive for Tesla. When he was talking
Elon Musk is a winner. Could we just all accept that he's a winner? And so him committing to Tesla.
I don't think it even needs to be said, since it's the most obvious comment in the history of mankind.
There are a lot of people that would argue
he's the richest person in the world right now. Like, my goodness,
you want Elon Musk in charge of whatever project
can we just
doing.
As a society stop having every conversation through a political lens, please?
Like, seriously, even if you hate him politically, the guy's a genius. He's a winner.
I don't even care about having the political conversation, honestly. To me, it's about Tesla and Elon's time at Tesla. The same way any CEO that was pulled to do other things, once they come back, there's a focus there, and when there's a focus there, there's an efficiency there. And that's what Elon's all about, is effectiveness and efficiency. And that's hard to do when you have your attention other places. And obviously with Doge and everything he was doing there, that takes up a lot of time. It takes up a lot of oxygen. It takes up a lot of energy. And especially when you're trying to fight political messages out there. And so, taking a step back from the political realm, focusing on his legacy here on Tesla, XAI, SpaceX, the Boring Company, all of those side projects he has. How does that be seen as a net negative? Obviously, there's some Q score to improve here. That's to be had. But Mark, that's kind of what happens when you leave the political realm a little bit. So I felt that was a positive side for Elon this week, and I'm looking at the 350 breakout, and I think
I
it's a
put
clean
Tesla
breakout.
back on my rotational credit list. Like, there's like, and I have very few individual stocks that I ever put on there. Tesla is one of them. I got it back in on the news. I'm a believer in Elon, right? Don't agree with him on all of his political stuff, but I do agree that he's a freaking genius.
I'm getting, and I'm not saying this to you, I'm saying this just in general. I'm getting real sick of saying, you don't have to agree with them on everything, but
dude, it's a standard
tell me,
disclaimer.
well,
I know.
No, I'm not saying, I'm saying everybody does that. I'm saying, tell me the last human being you met that you agreed with them on absolutely everything. You're married, I'm married.
Rush
do you agree with your wife on absolutely everything? Do you agree with everybody on absolutely everything? So do I agree with Elon Musk on every opinion he's ever had? No, I don't. Do I also think it's an extreme positive that one of the most ingenious, smart, innovative, creative, successful human beings of our time is going to focus on things that improve the quality of everybody's everyday life more? Yeah, I think that's a positive.
Yep, absolutely. NVIDIA, next story. And it's not, Jensen was out there talking about, criticizing U.S. chip export controls, calling them a failure, saying, NVIDIA's market share has dropped from 95 to 50%. It is the event next week, right? There's been a lot of good news from NVIDIA, a lot of great news, getting deals in the Middle East, right? De-escalation with China, and in the tariff, talk that's going on with Europe and Apple. Negotiations continue. It's been mostly positive vibes out of China, which specifically for NVIDIA is a huge deal. It's been really positive news flow. It is the big event next week. What did you think of, our illustrious CEO's comments and a little look ahead at the earnings, the importance of it next week?
I think Jensen was trying to get some good things coming out of the administration regarding policy and specifically chip curbs on China. Basically, what Jensen's argument is it's impacting U.S. technological production more than it's impacting China's. And so what Jensen's saying is we are in an arms race with China, certainly. We need to win that arms race with China. And Jensen's saying if you look at from when the chip curbs were put in versus where we are today, China is catching up to where we are in that same environment. So Mark, from where we were, you go back to last December when Biden put the chip curbs in, right? Or January, you go back there. Ever since then, okay, we were here, China was here. Ever since then, China's been coming up. Ever since then, you have DeepSeek. Ever since then, you have other Chinese LLMs. Ever since then, you have some production there. And that's what Jensen's argument is it's not in the fact that we shouldn't do what we can to in every single capacity to win the trade war with China, but we also shouldn't shoot our foot in the process. I think that's what Jensen's base argument is. Whether he can get that argument through the administration is going to be an open question, but it was just a week and a half ago that the administration talked about reducing the Biden chip curbs and replacing it with different language. We haven't seen the ultimate conclusion to that yet. I'm going to be writing about NVIDIA in the newsletter here later on today.
No, I didn't know that.
And I'm going to be talking about specifically regarding their earnings. And to me, their earnings report next week is the most important one. You talked about where the hedge funds argument is where the growth is going to come from. Well, I think NVIDIA is going to have something to say about that next week on the guidance side of the equation. And Mark, if you look at from when the May 23 super cycle began on NVIDIA, so in May of 23 is when you had that first report on NVIDIA that basically, it was right here, that basically saw a 53% increase in forward-looking guidance, and most of it was based on AI. It was that earnings report that I fully embraced the AI narrative. It was that earnings report when I decided to build the AI Gold Rush watch list and start teaching our community about the AI environment in general. There's been a couple important moments in that time frame to understand, both in terms of the initial AI super cycle to the Blackwell chip to understanding all of that saga. But in the last year, NVIDIA is at the same price today as it was a year ago. last year, right here, you were clinging on to about $130 a share. Today, you're at $130 a share. In that same year, NVIDIA has had beats on EPS, beats on revenue, increases in forward-looking guidance. But when you look at the early beginnings of the saga, that guidance explosion was going up 53%, 26%, 15%. And now guidance is going up 1%, 1.5%. And so in the time frame we've seen this market slow down on NVIDIA, it's been the guidance slowing down. It's not that their revenue is slowing down. Their revenue is something amazing. Their earnings reports are the end all be all of beauty when it comes to earnings season. But the simple reality is the standard we judge NVIDIA on in earnings is not the same standard we judge even other Mag 7 components on. Other Mag 7 components don't get judged on the standard that NVIDIA gets judged on. NVIDIA is the king, queen, and country of the market. They are the king, queen, and country of the growth narrative. They are the king of the AI space. And to me, next week is a very important earnings report because of that ultimate question of where's the growth going to come from. If we're talking in this podcast next week and NVIDIA misses on guidance because the China headwind question has been bigger and has a bigger impact, they had over $5 billion chargeback on this quarter on China headwinds. The chip curves are impacting their sales. China's the number one player when it comes to NVIDIA outside of what the US hyperscalers do, obviously. And so that's been a big tailwind for NVIDIA. On the flip side, Elon Musk is pledging to buy up to 100,000 next generation GPUs from NVIDIA as he's looking to build out a massive AI program. You have Trump last week in the newsletter. I was writing about Trump's Middle Eastern trip, and there's trillions of dollars pledged on AI, not in just AI build out, but trillions in general on the AI build out side of the equation, hundreds of billions of dollars. So you have this Middle Eastern build out that is really getting a lot of attraction from US-based companies. You have the open question of US hyperscalers expanding. So on the bullish side of the equation, you have the Middle Eastern build out and you have the hyperscalers expanding, including Elon and Tesla. On the bearish side of the equation regarding guidance, you have that open question on how much has the headwind on China impacted NVIDIA and how do they see this moving into the future? If NVIDIA is going to come in with a guidance report that is 1% above expectation against what the market expects at 43 billion going into next week, it's going to have a hard time finding the growth argument. Quite frankly, yeah. You're going to have to see more alleviation on the trade war side of the equation. If NVIDIA comes out and that news that is on, the hyperscalers expanding AI production, massive data center build out as well. Well, that could offset the China headwind. So I'm going to write about it extensively just because I think it's a really important thing to understand next week. And I'm going to go through all the detail in the newsletter.
Yeah, I'm just going to fire through a couple more. Home Depot came out, announced they weren't passing on tariff to their customers. Saw some, volatility today on that. Target revised their guidance lower, basically settling the debate forever on Walmart versus Target, as if that wasn't decided already. Really nasty numbers came out. Watch this support level. If it breaks in the coming weeks, could provide a good bearish opportunity. And Nike back in Amazon. First time since 2009, Nike back in Amazon, resuming direct sales after years focusing on its own channel. And plans to raise their prices just a touch, not mentioning tariffs, but mentioning tariffs. They were the hedge fund, Matt. They're like, we're not going to talk about why we're raising our prices, but we're going to raise our prices and go back to Amazon in one.
Listen, in the market, I'll always trade the trend, and the short-term trend is bullish, and so we're going to be tracking that. That doesn't mean there's not good bearish opportunities in the market. That's a different conversation. Target had a terrible earnings report. Nike, you better hold 60. I thought Home Depot was in line, but they're going to eat some of the tariffs. That's going to impact some profit margins. But I didn't have a take on their earnings this week.
Yeah, listen, gonna skip by some of the games that I had planned. We'll play those next week, Matt. I had some fun games for you to play, but a lot of macro, a lot of stuff to talk about
I
on that.
warned you.
But let's get to Coach's Corner. Got some questions. First question, Matt, is one that I had a couple people do different versions on, and it was about the bill that passed this week, right? You're a big political guy, you're a big macro guy,
The
right?
big, beautiful bill.
You know, the big beautiful bill, and they asked what your take was it on, because they had heard a lot of things about it being fiscally irresponsible, right? You saw a
Well,
lot of those
it is fiscally
headlines, and they
irresponsible.
wanted to know your take. So talk about it for a minute.
It's very tough to both embrace tax cuts as well as stimulus. It's tough on that side of the equation. It impacts deficits quite a bit. I'm going to stop short of giving too much opinion on the Republican passed plan out of the House, given the fact that the Senate will modify that plan. And I think that's what's most important to understand is we don't know the end result of the parameters of what's going to be in the bill. So I don't think I don't think we're there yet to really have a strong opinion on it. First and foremost, it passed the House this week at a vote of 215 to 214. That passing sends it to the Senate. It doesn't make it law. It sends it to the Senate. And the Senate's going to debate it. And they're probably going to take 2 weeks. I would say 2 to 3 weeks to debate it, modify it. And there's some fiscal hawks there that have some concerns on the deficit side of the equation. It's slated to impact the deficit over the next 10 years by upwards of $3.5 to $4 trillion. And the deficit hawks and the fiscal conservatives don't like that. And so people like Rand Paul, Ron Johnson, there's a few others there in the Senate have already expressed concern that they would like to see the deficit side of the equation, be discussed a little bit more. On the House argument on that is basically this: that the CBO, which is the Congressional Budget Office, they're basically scoring the plan, and what they're scoring it as is they say that the U.S. economy is going to average a 1.6% GDP over the next 8 years. And in that average of a 1.6% GDP, based on the tax plan, the budget plan, everything in that big, beautiful bill, that's going to equate to a net increase on the deficit side of $3.3 to $4 trillion, basically. And what the House Republicans' argument is you guys are being too cautious and too conservative on the GDP expectation here. They're basically the House Republicans are looking at it as no, we believe the GDP is going to average out at 2.6% over the next 8 years. And based on that 2.6% growth, we're going to get the deficit to actually come down. So the debate is centered on the deficit side of it. And it's really how they see the economic environment projections in the future. I'll just say this. If you want to understand how that works, go back 40 years. We've been making those arguments for 40 years. And for 40 years, it's been very rare to hit those GDP average numbers. Because when you think about the average right now is under 2%. But when you think about the average, Mark, a lot of times the projections take into account non-recessionary analysis, we'll say. They take into account the perfect scenarios. Well, what we all know in traversing markets and economies over the last 8 years, there were some black swan events in the last 8 years. And guess what? There will be some black swan events in the next 8 years as well. And so I think that's where the debate is centered. We'll see where they land on that. But at the end of the day, I think the bill's, in my estimation, certainly going to get passed. I think that's what the House set that standard. I would be shocked to see the Senate not try to
it's going to
find
get
some
passed.
degree
that's not even a debate
of resolution here. I think it's just going to be interesting to see the cuts on the Medicaid side of the equation, how that impacts that bill in the Senate, and then how the fiscal Republicans in the Senate, how they handle that deficit conversation on the expectation on GDP. I fully expect it to be modified, but July 4th, I think they're targeting. Can they get it done by July 4th? I don't know. But there's nothing like a deadline to get politicians to actually do some work.
Yep. All right. Next question is, what is the first thing I should do every day? And I'll take this one, Matt. Listen, there is not one correct answer to that,
there is.
right?
Watch Morning Action.
Okay. See that there's a promoter right there, right? That's that's it. Uh, for me, like whether you watch morning action, whether you check your watch list, where you do your pre-market orders, right? The routine and the methodology you do that works within, because some individuals have to work a 9 to 5, right?
Mhm.
Other individuals are full-time traders. And so the one right thing, right, is going to differ a little bit depending on whether you need morning coffee, have to hit the train to get to work, or whatever it may be. But the importance of a routine and a methodology to follow cannot be understated. That is one of the things that I'm excited about this week's webinar, where you walk through the 7-step guides to trading, Matt, is that you walk through a methodology of how to approach the market, right? You don't
The
want
seventh
to,
step is kind of designed in daily routine formation. Yeah.
and so like, like however you end up tweaking your perfect routine, you want one, and you want a methodical way of approaching the decisions you make. Attend that webinar this week, the 7-step guide to trading. It is going to be a fantastic way to look at not just trading, but how you approach trading. And Matt, I'm very excited for it. And then I think you'll find your answer to what you should do first every day.
Yeah, we'll definitely do some of that on this coming Wednesday. And so if you want to come hang out with me on Wednesday at 7 p.m., hit the link in the description below, and we're going to do exactly what Mark just said. We're going to talk about the 7-step guide to trading. And step 1 is kind of the first step you take in the day. What's the market doing? Answer that question. You always want to trade with the market. You want to trade in the direction of the market. You want to trade in the direction of the trends. You want to trade in the direction of the momentum. And so before you even go into understanding what you want to trade that day, you first got to determine what the market's doing that day. Is the market sitting at a support level? For example, market sitting at the 200-day moving average today. What am I going to do? Well, that's a little bit different today versus yesterday when we opened up underneath the 9 EMA in a little bit of a pocket. Having an understanding of step 1 through step 7 will help answer those ultimate questions and get you on a better process, better path moving into the future. So you don't miss certain things, and you have the information you need to make the decisions for your trades and your investments that you need to make.
Yeah, absolutely. Listen, that's a fantastic way to end the podcast. Matt, this is going to be a great event. Check out Morning Action each day. You can sign up for Tackle Trading for Morning Action. Attend that webinar. Sign up in the link below. But Matt, give us a final word. Send us out.
Yeah, if you enjoyed the podcast, best way to support the podcast, ladies and gentlemen, hit that like and share in YouTube. Help us with the visibility. Tell somebody else about it as well. And with that said, I just want to say thank you to the best part of the Trading Justice podcast, Tackle Trading in general. And that's you, the listener. That's you, the pro member of our community. Just absolutely love you guys. We're here for you in any single capacity you need. If you do need us, hit us up at team@tackletrading.com. Hit us up in our Tackle Trading Discord. And with that said, I hope everybody has a blessed weekend, extended weekend as well. And we'll see you next week as well.
Have a safe weekend, everyone.